Hello, everyone. Okay, let's start it. Get your water, get your notes, and we're gonna go. Right, so as I've just mentioned, it's gonna be a very, very lazy week. All right, if I can say that, a very low volatility week, and I've mentioned that on my Telegram. Right, if we come here and have a look at that, just in a second. It's loading. My computer is not going too fast at the moment. Okay. Good morning, how are you doing? Can you please send me the link? Yes, I can send the link. Someone was invite here. Someone is needing the link. Let me send this to them. There we go. No, so I've mentioned that on my Telegram, that we would have a very slow week. All right. Trust you heard, as we kick off this week, it seems we might encounter some low volatility in the market into Thursday or the start of Friday. Okay. So brace yourselves for a potential uneventful week. So what I mean by that is we don't have much happening on the market, and we're going to go through these right now. Right. Okay. First of all, yesterday, Monday, we did have the building parameters, and we had the monetary policy meeting minutes from Japan, from Bank of Japan. And we had the FOMC member Bostic speaking. Not much happening there, all right. A little bit of the dovish sides from Bostic. We already know that he's a dovish member, so quite expected already. Today we did have the new home sales, as well as the Bodge core CPI, and now the consumer climate just at 6 p.m. that came in much weaker than expected. So pretty bad for the euro. Okay. Let's have a look on how euro is performing at the moment. Well, euro is not performing bad. Euro is performing good. So let me put into the 1 hour here. Oopsie. So euro is performing quite well, after the inflation expected, as expected, but declining from Europe. We did had another drop, and then we had the FOMC and then the ECB, and another drop. So I'm expecting it to come to somewhere around here, to be honest. All right, so a little bit more to go before it comes down. But anyways, as I was saying, it came negative, as well as the CPI on Japan. It's crazy to say that, but it just whatever news coming from Japan, it makes it weaker and weaker. If we look at the USD JPY, for instance, this was when the Bank of Japan transitioning off the monetary policy from negative rates to positive rates. If you don't know what we're talking about, then you can go to our ACY channel on the YouTube, and you can watch the last Thursday, if I'm not wrong. Is it last Thursday? You can watch last Thursday webinar recording. If you see here, where is it? There you go. You can have a look on here that this is what I'm talking about on the Japanese yen. And whatever comes from Japan, it just makes the Japanese yen weaker and weaker. And as we can see, we are forming some sort of shaping of a triangle or something like that. I don't know much about patterns. You guys know that we may keep fulfilling the 152. Oopsie, 152. That's where my first target is. I've mentioned this many times. And then after that, 155. And after that, 170s. Where is this? 170s. There we go. Okay. So coming back to the economic calendar, we will have Spanish GDP in a few minutes that this is going to be very important. All right. This will show how Spain is going into these all central bank decisions and everything. So it will show us if they are actually performing good, if they are not performing well, or how this is gonna go. Now, oh sorry, big pardon me. It came positive. It didn't came negative. In a sense, well, it came negative, but it came better than the forecast. All right, this is why euro dollar is going up. Sorry, big pardon me there. Now, we will have as well the durable goods, as I just mentioned, but I just want to bring attention here to the Spanish GDP. Spanish GDP is expected to come higher than expected. All right, so the forecast is to be better than what it was in the previous, 100% better than what it was in the previous. So that's pretty good for euro. All right, that would drag euro dollar a little bit up, because after that, in 5 hours and a half, sorry, in 4 hours and a half, then we're going to have the durable goods order for US. That this is actually expected to be much better than what the previous was, all right? At least on the forecast, as we can see. Even the core durable goods and the good durable goods month over month, both of them month over month, the core durable goods is expected to be sorry, where is this thing here? Let me take this off. The core durable goods expected to be much higher than what the previous was. If the previous was negative 6.1, and now the durable goods went to break even and then turns into positive territory to 1.2, that's going to be very strong for the US dollar. If that actually happens, right? Now, if that doesn't happen, but is still better than the previous, it won't have much impact. It will have some of latency, how can I say that? Short weakness, all right, short weakness. And then after that, I will continue it this way. But I would like to see the King dollar, reassuring itself right now. Now, continuing that, we're going to have the wholesales for Canada month over month. And then that's it for today. Now, going to Wednesday, we will have Spanish CPI. That's going to be the only interesting thing for Europe, as well as lane speaking. And most importantly, we're going to have the consumer confidence at 1 a.m. today. Consumer confidence is expected to be a tick higher. So the previous was 106.7, and now they're expecting 106.9. So 0.2 higher than the previous. Look, in terms of consumer confidence, it is a very important measure, and I've mentioned this already so many times, that you need to put consumer confidence on your trading system, to look at your trading system. Let me take it off the blur. It's much better. You need to take a look at the consumer confidence. Why? So let's say you are, all of us, we all are consumers. We all consume something. We consume food, we consume beverages, we consume clothes, anything in sort of retailing. Okay. You will only buy something, well, majority of the people will only buy something if they actually feel that the money they have is worth what the price, it's worth the price of the product they want, right? So if, let's say, the product is $100 and you think that that's not worth $100, that's worth probably 70, but inflationary, inflationary aspects are too high, I'm not going to buy it. I'm going to wait. All right. Of course, it's not about $100. It's about much bigger purchases, like houses, cars, or land, and so on, business, and so on. So these consumer confidence show us how confident the people are on US to spend their money. All right. And we know that the average hourly earnings have been coming. Let me show you all. Average earnings of all employees. That's Fred. Okay, that's really good. Now if we look to January 2023, it has been coming up, but in a percentage wise, we came down. These numbers are not quite looking average hourly earnings month over month. Let me have something here, guys. Let me have a look on that. If we, oh, there we go. There we go. That's what I want to know. Okay, where's the charting? There we go. I'm putting 5 years. Okay, so yeah, 1 year looks better. So what I want to show you is that we always have a peak and then we come back and then we slowly go up and then boom, back again. So if we look at down here at February, right, the average hourly earnings came lower than what it was expected and much lower what the previous was. Different from January because and the actual came much higher than what the consensus and much higher what the previous did had. All right, so that's a really interesting news that I'm exciting to see how confident the consumers are if they're getting paid less and the products there are getting expensive and expensive, and the inflation is sticky even though for the PPI and the consumers the CPI and the PPI, right, the producer price indexes that shows the inflation on the beginning of the producing, and for the CPI that shows the inflation on the end of the stream, right, for the consumers. So very nice, very, very important news today. Sorry, tomorrow at 1 a.m. and follow, of course,
I
by the
have a
Spanish.
question.
Yes, go for it.
Um, if the consumer confidence comes much lower than expected, can we then assume that the hourly earnings will also come less than expected because you can't spend money that you don't have?
That's a really good question, actually. That's a really good question. Thanks for the question, Casey. So yes, you can assume that because you know I think you have been with me for a long time now, and you probably were here when I've mentioned that I was actually going to touch base on this point where all of the all of the news, all of the data have combination with something else, right? So if the consumer confidence are not high enough, if they're lower, yes, that does show us they're not spending. Therefore, if they're not spending, it's because of money as well. Have we just looked at it? So that means that in the yearly basis, after we need to see, right? It's too early to say on a yearly basis, but let's assume in a quarter, okay? Because we are finishing March right now, so January, February, March, their quarter. Um, they haven't had much profits, they haven't had much money as they had, let's say, in last year where the consumer confidence was higher. So yes, you can assume that. Yes. Did I answer your question? Hopefully I did. Right. So Spanish CPI, as I've just mentioned, right? And then is expecting to have a big jump here. So that's going to be positive for the euro because if we have higher CPIs, and one thing that's very important, I would follow the speeches this week, right? Because what we have this week is mostly speeches. So I would definitely follow those speeches. Then moving to Thursday and Friday, that's where the things get interesting. Okay, things will get interesting on Thursday and Friday as of Wednesday, Tuesday, and yesterday didn't had much happening. So on Thursday, we're going to have, first of all, the UK GDP. All right, that's going to be very, very important, very, very good. Of course, retail sales as well. Sorry, retail sales from Australia, UK GDP, and most important, we will have US GDP. Okay, quarter over quarter, quarter four. So that's really, really nice. Okay, that's going to be really important to see if the US did actually grow or if they didn't. Because remember, if we go to the FOMC, let me do it quick here. Let me see if I can open it and find it pretty quick. In 2023, on June, yeah, I think it was June, HML. Let me get this. Stuff review on the economic situation, financial situation, economic outlook here. Real GDP growth over 2024 and 2025 was projected to be below the staff's estimated to of potential output growth. The unemployment rate was forecasted to increase this year, peak next year, and remain. This is 2023, guys. Remember, so next year would be this year, 2024, and remain near the level to 2025. Current tight resource utilization in both product and labor markets was forecast to ease with the level of outputs in 2025, blah, 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 blah. Okay, so real GDP was projected to decelerate in the current quarter and the next one before declining mostly in both the fourth quarter of this year and first quarter of next year. Okay, so let's have a look what we have here. Quarter 4 of next year, 2023. Sorry, 2023. So what they're saying here that the current quarter, that's quarter 3, the current quarter and the next one before declining modestly in both the fourth quarter of this year and the first quarter of next year. So they're expecting the GDP to decline from quarter 4 last year. Ooh, that's not good for the US dollar. Okay, so let's have a look at here again. I do this because I have the camera right on the top of the screen, so I can't see my tabs. I can't see those things here, so I have to, go and then see under the camera. Anyways, so here is expected, well, the previous was 4.9 and now is expected to be 3.2%. If we look to the projection materials, let's have a look at pretty quick. This is 2023, remember again. If we look to GDP, changing real GDP, March projection, PCE, federal funds, changing real GDP 2023 upper end. Okay, they're expecting 2.2. That's the upper end. The lower end is 0.4, but let's work with 2.2, right? The higher, the lowest probable, but the higher end of what they're expecting. So 2.2 in there. And if you look here, they're expecting 3.3 for quarter 4, right? So if we look back here, 2.0. So that is not good. We are most probably going to get something lower than 3.2 or 3.2. So I'm expecting something between as expected or into lower risks to tilt it down. Okay, so that's going to not be good for the US dollar. All right. And we're going to have initial jobless claims as well. But let's come back here for the GDP of UK. They're expecting negative growth, all right, from positive to negative. So that's going to be very bad for the pound. If we look to the pound right now, it's not trading very well, to be honest. Since beginning of this year, it has been, range trading, but just now, 1st of Jan, 2nd of Jan, somewhere here. So year to date, it has been negative 0.62% growth, so no growth. And they are continuing to expect no growth for UK. Okay, so that's not good. And US in Australia here, retail sales month-over-month expected to be lower than last February. I do agree with that. Now on Friday, and Canada GDP as well. Now on Friday, we will have Chicago PMI, and then we have some minor minor euro areas, so like French CPI and HI CPI, and then we're going to have core PCE index, PCE price index year over year and month over month for US, and the Fed will and then Powell will speak on Saturday for us, and we have the CFTC. So that's my rundown on the economic calendar. Do you guys have any questions, or we can move on to the charts while I drink some water?
I have a question. It doesn't seem like any currency right now is particularly strong. What currency do you think we should look at as a strong currency? Because nothing gives me any optimism that maybe this one is pretty weak. Because as you've said, the GBP doesn't look good, the pound doesn't look good, the dollar doesn't look good. So what should we look at? What currency should we look at as the stronger currency so that we can pin it against the weaker one?
No. I love to, you know, those interaction. They're pretty good. So there's something called strength. All right. I'm going to show you currency strength. If I have a here, I have a on one. Sorry, I have one thing here that I can show you. Let me put it to 5 days. Okay, so all the currencies here are the let me open this on a public website. Just a second, guys, because you won't have access to this, but you will have access to this one. All right, so this is what I want to show you all. So that's the currency strength, right? Whenever you feel undecided of what is strong or what is not strong, you can come here and have a look on that. Don't make your trades, of course, based fully on these two, but this gives you a leading of what currencies is stronger at the moment that you can sort of pair with another if the fundamentals line up, right? So at this moment, we have the New Zealand dollar having the stronger um stronger grading. Okay, stronger grading. So it is having 13.85. As of the CHF right now is having the weakest grading with negative 15.84. So CHF and New Zealand dollar, they are tradable. NZD CHF. So let's have a look. It's supposed to be going up because the New Zealand dollar is it stronger than the CHF? Well, let's have a look on the charts. And there we have it, right? So it's going up, and fundamentally speaking, it does make sense to long it. Why? Because the SNB, the Swiss National Bank, have cut the rates unexpectedly. All right, they've cut 25 base points unexpectedly, therefore making the Swiss franc much weaker and unstabilizing the whole market. All right, so let's have another look on here. So let's say what's this green pound? So pound is much stronger than the CHF as well. All right, so let's have a look on GBP CHF. GBP CHF. GBP CHF. It's going up. So, you know, those sort of tools does help you to get a guide into what's strong, what's weaker, and how can I trade it. But again, don't always, you know, how can I say that? Don't believe fully in these tools. You have to follow your strategy. You have to follow your principles. You have to, you know, have the rules a bit of entry and so on. But yeah, definitely handy. I'm gonna share this this link on the chat here, and you guys can go through and have a look at it later. You can go on yesterday, you can come back to today, and it changes every day, right? Because every day is different. Now let me close this all. So let's have a look now on euro dollar. What's going on euro dollar? Right. I'm do expecting euro dollar to continue heading down, okay, before we actually long it for, you know, for continuations. I've mentioned that my target is at 110, but first I was looking at you know, at a little interesting thing here that makes me think, okay, and I've mentioned this so many times already, that this is where the market could possibly come. Let me take this off so you guys can see it. Let me change the color. Let me put it into white. Okay, there we go. Here. All right. So if we look at back, we had this sort of box, and I've mentioned that so many times. And the market does actually come back. You guys know that. So here we had another box inside of a bigger box that we are right now. Okay, so here, so the market came here and then back, and now it's trying to break it down. So what I'm expecting is maybe we have a push to the upside. I don't think about, I'm not too sure if it would actually come to 61%. But we just had a breakdown to the trend. So continuation downwards here. Okay, we've made higher highs, higher lows, higher lows and higher highs, and then breakdown here. Okay, and then breakdown here again, and then breakdown and coming back. Well, sorry, not this one. Breakdown, come back, breakdown, mostly come back now, and we'll go to the 1773, maybe 1773. Let me put this on a better way. 773. 773, yeah, 773 would be a nice target for the euro dollar on the short term, maybe in the next, well, not short, not too short, maybe the next month or so. And then after that, because this is going to be the lower the lower band of trading here since 2023. Let me put into 4 hours. Let me hide all of this. Otherwise, we can't see anything. So 2023, daily chart. So 2023, oh, there we go. Let me take my pen. Let me take this thing here and on white. If we looked at it, there we have it. So it just feels like that we may continue to head it down on euro dollar until those lows here, and then maybe a continuation upwards. All right, maybe. So that's my take. And you guys know why. All right, I've been mentioning that for quite a few times. There we go. This is all the reasons why. Okay, if you don't know yet what I'm talking about, you've missed the webinar. Go to the ACY Web YouTube channel and have a look on the how to backtest your fundamental strategy. And this is what you will learn to do. Now, moving to USD JPY now. You know, I've mentioned already, nearly hitting my target at 152. So expecting to have a break of these sort of consolidation area here and go up, and then after that 155. But this is if, all right, there's a big if here. This is if the Japan, the Bank of Japan doesn't come in and do a speech intervention. All right, how can I explain this to you? So an intervention, there's two ways, all right? There's a way that the central bank comes in and actually buys or sell the currency or government bonds or treasury yields or whatever. And the other intervention is when the central bank do a speech, the chairman, the most influenceable person in the central bank comes and do a speech about the currency and what they will do. And the market reacts in a sense already react premature to what will actually happen. So there's two ways. So most probably if happens any of those would happen the speech way, not the actual intervention, because they've mentioned already they won't be doing this. They will be electronically transferring funds, all right, so ETFs, buying government bonds, all right. So in that way they don't sort of manipulate the market, that they know that they can do pretty well with Japanese yen. All right. Now, my take is long I'm continuing to look at long positions into USD JPY. Now, pound dollar, it all comes down to the news, to the data we're gonna have this week. All right. Let me drink some water here, just a second. Speaking 1 hour without drinking any water, it's not nice. I actually got some sore throat last time. But it's better, pausing and getting some water. Now, where we at? UK pound. So pound dollar, right? That's a tricky one. Why? Because the pound it's weaker, but when the US dollar gets weak, it gets pretty strong. So if you see here, right? Let me highlight it. There we go here. This is when we had the FOMC that the market first took as a negative sort of instance, and then the market is taking now as positive. So this is just another pullback, all right? This is just another pullback somewhere around those highs, or maybe here, and then coming back down. Now, do I have a target for that? Look, technically, I don't, but if we look to the chart here, it's pretty simple to see that we do have an area of interest on these sort of prices, 125, 600, right? 125, 500, sorry, 125, 500, that the market can push down. All right, so the market can go all the way there, and then it comes all the way down. Why? Again, we are into a bigger consolidation. If we zoom out of the picture, we can see that the market, it is trading on a big consolidation, right? This is a daily chart, and it haven't yet broke out of this consolidation. So the probability wise is that it continues to come a little bit back down somewhere around those lows and jump back up again, and it goes like that. Right. So now this is the price action wise. Now when it comes to fundamental wise, as I've just mentioned, they are having a negative GDP, negative growth domestic product. So this is not good for the currency, as well as the Bank of England, haven't been too keen to raise rates or cut the rates. So they are sort of undecided in there, in that scenario. So when we take all of these, combine it, and the CPI did actually came down. Remember, the UK was one of the economies that had the highest inflation in the whole G10 group, and now they are continue with high inflation, of course, but they are keeping up a good pace on reducing it because higher rates are making effect. But we can't forget that if they have another bad GDP, they are into a recession. Right, they're going to be into a technical recession if they are not already. So that's going to be very, very bad for the pound. And if, all right, this is just an if this consolidation is consolidating to go even lower, my friend, that's going to be very bad for UK, right? The problem here the only problem that it keeps me afraid is, what about if the US's strength don't actually ends? Because it's a US. You can't how can I say this word? You can't subestimate US. When you think they are dead, like that, they come back. Right? So it's pretty hard at the same time to predict these moves. So in a sense, I'm more bearish in the UK against the US dollar than bullish. All right, that's my take. And if I could pick a side, I would pick to the short. Yeah. Now, but I don't have any target. All right, I don't have any target. So technically speaking, I would say these lows here in 122s, but this is only technical. I would love to get a model done and actually come here and talk to you, but I don't have anything at this stage. Maybe in the in the coming weeks I do. Now, going to New Zealand US dollar. New Zealand US dollar 4 hours, it's getting really, really wrecked. All right. Primarily because New Zealand is on a technical recession. All right. We had 2 quarters, 2 GDP quarters bad, all right, negative. So that's not good. Why though? It's not good because New Zealand, it's a very small country, all right. If we look to the map, if we look to here, let me see this. Let me get a nicer one. Oh, there we go. This one is cool. Okay, so look at those, look at all the countries, all right? We have China, Brazil, Australia, Canada, US, Alaska, Spain, everywhere here, okay? If we look to Australia comparing to New Zealand, New Zealand is so small, all right? Look at this. It's just a tiny bit of Australia. It's probably 10%. All right, let's have a look on how many inhabitants there are in New Zealand. They have how many people live there? So they have 5.5 million. They have 5 million, guys. 5 million. Can you believe that? That's 5 million. In Sydney. Now have a look in Sydney. Only in Sydney. Only in Sydney we have 5 million. Not in Australia. In Australia we have 22 million. All right. So 25 million in the whole Australia. Look at in Brazil now. In Brazil, we have 240 million, right? So when we look to New Zealand, just for comparison, all right, for small, mid, and big, all right, small New Zealand, mid Australia, and big Brazil, let's say. And when we look to these, New Zealand is such a small country, and why they are not performing well? They could, all right, because it's so good, so easy to maintain. Well, because they live mostly, the balance sheet from New Zealand, it's mostly from exportations, all right? So they sell a lot of stuffs to other countries to get money, all right? And we all know that in the COVID area, into the pandemic, everything was closed down and they could make trades with each other. So they got wrecked into there, and they still feeling the effects of the COVID. And plus the central bank now, and plus the inflation. So all of these still affecting the economy if you stop and think for a second. All right. So most likely we will continue to see a depreciation of the New Zealand against the US dollar towards these lows here. Okay, very clear to me, very, very clear to me, okay, that we may come back, but let me see the pen. We may come back somewhere, but we will continue to drop. All right, that's New Zealand dollar right there. USD CAD. USD CAD have reached the target I've stated. Therefore, don't have any idea where it could possibly go again, because US and Canada, as you all know, they are pretty, they are sisters or brothers with each other. They are pretty correlated. All right, pretty correlated. So if we look to a 1 week chart, you can see that the majority of the time they are ranging. Okay, ranging, a big ranging zone, ranging, and then they have something that goes up and goes down. But if we look to the oil prices that we all know, that Canada is a big a big oil producer and oil exporter, they will definitely take advantage of these higher oil prices. Therefore, the Canadian dollar can be stronger compared to the US dollar. So I'm just waiting for this to happen. All right. When will it happen? Most probably next month. Now, CAD JPY. Let me delete all of these. Okay, CAD JPY, guys, all the currencies leading with JPY are much stronger than JPY. So let's say CAD JPY, Aussie JPY, Pound JPY, New Zealand JPY, and so on. They're always much stronger at the moment of than the JPY, because we all know why. I've explained this multiple times. I'm not going to come back and explain again. So same take on here. All right, continuation of the upward trend. And the Aussie dollar, we are looking at this market to go down. If you haven't watched yet, I would highly recommend watching a video with Lenny, Nathan Bray, and Lachlan. Let me show you if my computer loads. ACY. Wow, my computer is really slow. ACY, there we go. That's the video I'm talking about, this one. All right, so have a look on here. Nathan Bray, as you guys know, Lenny, as you guys know, and Lachlan, or new in the office. They've made a nice video, today and talking about the Australian stock and the Australian dollar. All right, so I would highly recommend you to watch it. Let me send the link into the chat. Now coming back here to Aussie dollar. So, we all here into the trading floor are expecting Aussie dollar to go down. All right, so I'm just going to stick with that. And I will let you guys watch the video to know why. All right, so comment on the video as well. I came from Luca. Now CHF JPY. Someone asked about CHF JPY. Now this is a tricky one. Okay, this is a tricky one. Why? Economy wise, this is a nice pair actually. Economy wise, you are expecting two bridge collapses in Baltimore after cargo ship collision. Oh no, just a breaking news at the TV here. Baltimore. Where is this? Baltimore. Where is Baltimore? Baltimore stays on Maryland. Maryland, yeah, well, a bridge just collapsed in there. US. Wow, crazy. Okay, so CHF JPY. When it comes to CHF, we all know the SNB, the Swedish National Bank, cuts the 25 base point rate. The JPY, on the other side, the Bank of Japan did raise the rates from negative to positive, and now they have a band that won't go below zero. So they are not on negative territory anymore. Taking those two options, which option would you prefer? CHF, where it cut the rates, or yen, Japan, that didn't cut the rates, but it didn't hike the rates, but it won't go lower. So they've bring to zero to positive. Of course, you would go for yen, right? Japanese yen, exactly. So therefore, this is why Japanese yen is getting stronger and stronger against only the CHF, because if you look to other currencies is still paying more dividends than yen. All right, so that's a very nice trade. So if we look here very right carefully, most probably we will have a coming down towards this area of 162, 167, okay? And then after that, around this. But first of all, let's get to this area here, and then next Thursday, this Thursday, we will discuss more, okay? Now, gold will, my take, I've seen some analysts talking about $500 pullback. Let me see where this would come. So now is 173, so 600. 1,900. Oh no, that's too much. 173, that's $100 right there. Nah, that's too much. I don't believe on a $500 pullback on gold, all right? I do continue to believe on a uptrend making all-time highs. And I've made a video on that. Why today? Well, because when you have this confusion on the market, this is historically, you can get gold. Gold is the safest asset, as you know, this is what everyone says. But of course, fixed income are even safer than gold. You're not going to lose your money for the government. So anyways, there's always someone to say, no, this is better than this, and this is better than that, and so on. I respect your opinion. But historically, the data, the numbers, the proof, it's not someone talking, it's the number that proves that gold have always performing better than any other, commodity wise. So, and it's much more trustworthy than others. Okay. So, in my opinion, when it comes to those moments on the market that we don't have much to look at, US is going to cut 3 times this year. S&B, Swiss franc already cut it. Japanese yen, don't know what they're going to do. Australian dollar, they know what they're going to do. So when it comes to those aspects, when it comes to this time, people will continue. People will buy gold and will go and hit all-time highs and all-time highs. It happened always again. It's going to happen all again. All right. So my take is now, I've told it about 2,200. So we just got it in there. Now, most probably, if we look to the 1 hour. Okay, so if we look to here, read extension. Oopsie, sorry. Let's say that this is the bottom. We would be looking at 2,284 as our next target. All right. So whatever it goes, it probably will go up. All right. Now, DXY US dollar index. US dollar index have been a bit tricky one. Okay. Yes, we did get it right on the side here, but right now it is getting strange, very strange. Okay, and predominantly moved by the FOMC. Predominantly moved by the FOMC. Of course, we're gonna have GDP this week on Thursday or Friday, if I'm not wrong, and this will definitely move the US dollar, but maybe a continuation higher. Even though we have a lower GDP, that we may see, the US dollar reacting negatively, but continuing higher after that. All right. So guys, this is all from me today. I think I've could cover the big topics and, go over everything here. If you have any questions, please put into the chat. Or otherwise, we finish here, and I see you all on Thursday. Not for long. I don't think we will see the BRICS, Brazil, Russia, India, China, and South Africa currency, stronger, because US dollar will always be the king when it comes to these sort of aspects. So nah. Not a problem. Yes, I will upload it to the YouTube, and I don't have anything to talk about Bitcoin. I don't know much about Bitcoin. This is why I brought in a specialist that you should watch the podcast that we've just posted onto the ACY YouTube channel. I've posted the link of the video into the Telegram, so have a look in there. All right, guys, so this is all from me. Hopefully everyone have a nice week ahead, and I see you on Thursday. See you guys. Take care.